The siege has begun, and the world's silver supply is caught in the crossfire. Right now, across the mountains and deserts of Mexico, a war is being waged against the mining industry, not with bullets and bombs, with blockades, with regulatory decrees, with water shutoffs and permit revocations, and the casualties are piling up. The world's largest silver mine, blockaded for 3 months, production halted completely. Major operations across Zacatecas and Durango, water allocations slashed, throughput collapsing, 47 mining concessions, currently under government review for revocation. This is not a future threat. This is happening right now. Mexico produces 24% of the world's silver, nearly 200 million ounces annually, more than any other nation on Earth. And that production is being systematically dismantled. In the past 18 months, Mexican silver output has fallen for the first time in a decade. Community blockades have paralyzed major operations. Regulatory actions have created existential uncertainty. Foreign investment has collapsed by over 30%. The mainstream financial media is not covering this with the urgency it deserves. They are treating it as local news. It is not local news. It is a global supply emergency. When Mexico's mines stop producing, there is nowhere else to get the silver. Peru cannot replace it. China will not export. The recycling industry is already maxed out. The only mechanism that can balance a Mexican supply disruption is price, and price is about to move. The blockades at Peñasquito alone removed 20 million ounces of annual production from the market for months. The water restrictions in Zacatecas are curtailing operations that produce tens of millions more. The regulatory uncertainty is freezing investment that would bring future supply online. The cumulative impact is a supply crisis that is already underway, and it's accelerating. Welcome to Chronicles of Currency. Mexico's silver mines are under siege. The supply emergency is here. Let me show you exactly what is happening and why silver prices are about to explode. I'm your host, and this is the channel where we trace the supply chain disruptions that the mainstream refuses to acknowledge. We identify the choke points before they become crises. We connect dots that Wall Street analysts are paid to ignore. What I'm about to present is based entirely on documented events, news reports, company SEC filings, earnings call transcripts, official government announcements, verified accounts from industry sources. This is not speculation, this is journalism. Mexico's mining sector is in crisis. Major operations have been blockaded, suspended, or curtailed. The regulatory framework is being weaponized against the industry, and the production numbers are falling. In this video, I'm going to walk you through the specific operations that have been disrupted. I'm going to show you the blockades that halted the world's largest silver mine. I'm going to explain the water restrictions that are strangling production. I'm going to document the regulatory assault that is driving foreign investment out of the country. And I'm going to calculate what all of this means for silver prices. The information is verified, the implications are explosive, and the window to position yourself is closing. The siege of Mexico's silver mines is the most significant supply disruption since the pandemic shutdowns of 2020. And almost no one is talking about it. Let me show you what's happening. Let me start with the event that should have been front-page news around the world but was barely mentioned outside of mining industry publications. The blockade of Peñasquito. Peñasquito is not just any silver mine. It is the largest silver mine in the world. Operated by Newmont Corporation, the world's largest gold mining company, Peñasquito produces approximately 28 million ounces of silver annually. That is more than the entire silver production of Australia, more than Poland, more than Chile. A single mine producing 3.4% of global silver supply. In May 2023, that mine was shut down completely. Community groups from surrounding villages erected blockades on the access roads. They demanded renegotiation of benefit-sharing agreements. They demanded water rights. They demanded infrastructure investments. And they paralyzed one of the most important mining operations on the planet. The blockade lasted over 3 months. For 98 days, no ore was processed, no silver was produced, no concentrate was shipped. 28 million ounces of annual production frozen. Let me put this in perspective. The global silver market runs on a deficit of approximately 120 million ounces annually. Demand exceeds supply by 120 million ounces, filled only by drawing down above-ground stockpiles. When Peñasquito stopped producing for 3 months, it removed approximately 7 million ounces from the market. That single blockade increased the annual deficit by 6%. And here is what should alarm you. The blockade was eventually resolved through negotiations. Newmont agreed to enhanced community payments and infrastructure investments. Production resumed in August 2023. But the precedent was set. Community groups across Mexico watched what happened at Peñasquito. They watched a mining giant brought to its knees by road blockades. They watched the company forced to pay millions in additional benefits. They learned. Since the Peñasquito blockade, community actions against mining operations have increased dramatically. The template has been established. Block the roads, halt production, extract concessions. It works, and it is spreading. In the 12 months since Peñasquito, at least 8 major mining operations in Mexico have faced community blockades or disruptions. Some lasted days, some lasted weeks. Each one removed production from the market. First Majestic Silver has disclosed ongoing community disputes affecting their Santa Elena and San Dimas operations. Pan American Silver has reported community relations challenges at multiple Mexican properties. Endeavor Silver has cited community negotiations as a factor in production guidance. The industry is under siege. And the government is not helping. In fact, the government is actively encouraging the siege. The 2023 mining law reform explicitly empowered community groups to challenge mining operations. It created consultation requirements that give communities effective veto power over operations. It shifted the balance of power from mining companies to local activists. President López Obrador celebrated the Peñasquito blockade publicly. He praised the community for asserting their rights. He used the conflict as evidence that his mining reforms were working. When the President of Mexico celebrates the shutdown of the world's largest silver mine, you understand the policy direction. The siege of Peñasquito was not an isolated incident. It was a template. And it is being replicated across the country. The blockades are just one front in the war against Mexican mining. The second front is water. Mining operations require enormous quantities of water. Processing ore, controlling dust, cooling equipment. Without water, mines cannot operate, and the Mexican government has found a powerful weapon in water allocation. In November 2024, the National Water Authority Conagua announced that water allocations to mining operations in Zacatecas state would be reduced by 15%. Zacatecas is the heart of Mexican silver production. The state produces more silver than any other in Mexico. Major operations, including Fresnillo's flagship properties, operate here. A 15% water reduction does not mean 15% less production. It means operational crisis. Mining processes are calibrated for specific water volumes. Reducing water by 15% can reduce throughput by 25% or more. Equipment must be reconfigured. Processing must be slowed. Efficiency collapses. Multiple operations have already disclosed production impacts from water restrictions, but Zacatecas is just the beginning. Across Mexico, water rights for mining are being challenged. The 2023 mining law gave priority water rights to communities over industrial users. This means that if a community claims water scarcity, they can petition to have mining water allocations reduced or eliminated. In a country where water scarcity is increasing due to climate change, this provision is a loaded weapon pointed at the mining industry. Since the law passed, at least 12 mining operations have faced water challenges. Some have been forced to reduce production. Some have been forced to truck in water at enormous cost. Some have suspended operations entirely pending resolution. The water war is particularly insidious because it operates slowly. A blockade makes headlines. A water restriction doesn't. But the cumulative impact is devastating. When Fresnillo, the world's largest primary silver producer, reports that water availability is affecting production guidance, this is a major signal. When First Majestic discloses water challenges in multiple SEC filings, this is documentation of systematic attack. When industry associations warn that water restrictions could reduce Mexican mining output by 10% to 20%, this is an alarm that should be heard globally. The water war is not hypothetical. It is happening. And it is removing silver from the global market ounce by ounce, operation by operation. The blockades grab headlines. The water restrictions strangle production quietly. Together, they are dismantling Mexican silver output. Let me show you the documented evidence of disruptions across Mexican silver mining. Evidence 1. Peñasquito production loss. Newmonte's official disclosure stated that the 2023 blockade resulted in zero silver production for Q2 and Q3 2023. Full-year production was approximately 40% below normal levels. The company recorded over $500 million in losses related to the disruption. This is not disputed. This is in their SEC filings. Evidence 2. First Majestic regulatory disclosure. First Majestic Silver's 2024 10-K filing includes extensive risk disclosure about Mexican operations. Quote, "Our Mexican operations are subject to significant regulatory uncertainty, community relations challenges, and water availability concerns that have affected and may continue to affect our ability to maintain historical production levels. The company reduced production guidance twice in 2024, citing Mexican operational challenges." Evidence 3. Fresnillo production decline. Fresnillo plc, listed on the London Stock Exchange, reported that 2024 silver production declined 6.2% year over year. Their annual report cited community consultation requirements, water availability, and regulatory compliance as contributing factors. This is the world's largest primary silver producer, acknowledging that Mexican policies are reducing output. Evidence 4. Pan American Silver restructuring. Pan American Silver announced in late 2024 that they were conducting a strategic review of their Mexican portfolio. They cited elevated operational and regulatory risk as factors in the review. When major miners publicly discuss reducing Mexican exposure, the situation is serious. Evidence 5. INEGI production statistics. Mexico's official statistics agency, INEGI, reports that national silver production declined 4.3% in 2024 compared to 2023. This follows a 2.1% decline in 2023. 2 consecutive years of declining production in the world's largest silver-producing nation. The data is official. The trend is clear. Evidence 6. Investment collapse. The Mexican Mining Chamber reports that foreign direct investment in Mexican mining fell 34% in 2024 compared to 2023. Mining companies are not investing in Mexico. They are not expanding. They are not developing new projects. They are retreating. Evidence. 7. Concession reviews. The Ministry of Economy announced in December 2024 that 47 mining concessions are under priority review for potential revocation. Among the concessions under review are properties held by major silver producers. Each revocation removes production capacity from the market. 7 documented data points. Peñasquito shutdown. First Majestic warnings. Fresnillo declines. Pan American restructuring. Official production declines, investment collapse, concession threats, all pointing to the same conclusion. Mexican silver production is under assault and declining. The siege is real. Let me quantify what these disruptions mean for the global silver market. Start with the baseline. Global annual silver production, 830 million ounces. Mexican annual silver production, 190 million ounces, 24% of global. Global silver demand, 1.12 billion ounces. Current annual deficit, 120 million ounces. Now calculate the impact of documented disruptions. The Peñasquito blockade removed approximately 7 million ounces in 2023. The 4.3% production decline in 2024 represents approximately 8 million ounces below trend. Water restrictions across Zacatecas are estimated to reduce 2025 production by an additional 5 to 10 million ounces. Ongoing community disruptions at various operations are removing 3 to 5 million ounces annually. Total documented supply disruption, 23 to 30 million ounces annually. The baseline deficit of 120 million ounces increases to 143 to 150 million ounces. This is a 20% to 25% increase in the deficit. Now, Project Forward. If the 47 concessions under review result in revocations affecting even 25% of the targeted production, an additional 15 to 20 million ounces could be removed from supply. If water restrictions expand to other states as precedent suggests, another 10 to 15 million ounces could be curtailed. If community blockades continue at current pace, another 5 to 10 million ounces of disruption is likely. Realistic 2025, 2026 scenario. Mexican production declines 15% to 20% from peak levels. Lost production 30 to 40 million ounces annually. New global deficit 150 to 160 million ounces annually. Now calculate the price impact. At a 120 million ounce deficit, silver prices are approximately $30 per ounce. Historical analysis shows that each 10% increase in deficit correlates with approximately 15% price appreciation. A 30% increase in deficit, 120 to 155 million ounces, would suggest 45% price appreciation. $32 times 1.45 equals $46.40. But this linear relationship breaks down in crisis conditions. When deficits exceed 15% of annual production, price response becomes non-linear. The market begins to panic. Industrial buyers stockpile. Investment demand surges. In crisis conditions, silver could easily reach $60, $75, or higher. The math is straightforward. The siege of Mexican silver mining is removing supply from the market. The global deficit is widening. The price must rise to balance the market, and the siege is not ending. The obvious question is, why would Mexico attack an industry that provides billions in tax revenue and hundreds of thousands of jobs? The answer reveals the ideological transformation underway in Mexican politics. The current government's philosophy. President López Obrador, who governed from 2018 to 2024, described his administration as the fourth transformation of Mexican history. His successor, President Claudia Sheinbaum, continues this vision. The fourth transformation views natural resources as national patrimony that has been exploited by foreign interests for centuries. Mining companies, particularly foreign-owned ones, are seen as extractors of Mexican wealth who give back too little to communities and the nation. This is not a negotiating position. This is an ideological conviction, the practical politics. Mining communities are often poor and politically marginalized. Championing their interests against foreign corporations is popular politics. When a president celebrates the blockade of a foreign-owned mine, He gains popularity with rural communities, while losing nothing with urban voters who don't follow mining news. The political calculus favors attacking mining. The nationalist precedent. In 2022, Mexico nationalized lithium. The government asserted that lithium was a strategic resource that should belong to the Mexican people, not foreign companies. This nationalization established a precedent. If lithium can be nationalized, why not other strategic minerals? Government officials have publicly discussed whether silver and gold should be treated similarly. The threat of nationalization, even if never implemented, creates investment uncertainty that suppresses development. The environmental cover. Mining has genuine environmental impacts: water usage, tailings, habitat destruction. These concerns are legitimate, but the new regulatory framework weaponizes environmental concerns. Every operation can be challenged. Every permit can be delayed. Every concession can be reviewed. Environmental regulation has become a tool for political control of the industry. The community empowerment. The 2023 mining law gave communities effective veto power over mining operations through consultation requirements. This sounds democratic. In practice, it creates leverage for local political actors to extract concessions from mining companies. Some call it community empowerment, others call it legalized extortion. Regardless of interpretation, it creates operational uncertainty and additional costs. Understanding these motivations is critical. They suggest the assault on mining is not temporary. It will not be resolved through negotiation or a change in commodity prices. This is ideological. This is political. This is structural. The siege will continue regardless of the economic damage. For silver investors, this means the supply disruption is permanent, not temporary. Position accordingly. Let me project what unfolds over the next 12 to 24 months if current trends continue. Near term, 3 to 6 months. The 47 concessions under priority review will receive decisions. Based on the pattern of the 31 revocations already announced in 2024, expect 15 to 20 additional revocations. Each revocation will be announced individually, creating a drumbeat of negative headlines for Mexican mining. Water restrictions in Zacatecas will impact 2025 production. Multiple companies will revise production guidance lower. At least 2 to 3 additional community blockades of significant operations are probable based on current patterns. Medium term, 6 to 12 months. Cumulative production decline for Mexico will reach 10% to 15% from peak levels. Major producers will announce strategic reviews. Some will announce asset sales or write-downs of Mexican properties. The flight of investment capital from Mexican mining will accelerate. Exploration will effectively cease. Silver prices will begin to reflect the supply constraints, potentially reaching $45 to $55 range. Long term, 12 to 24 months. Mexican silver production will stabilize at a permanently lower level, 15% to 25% below peak. The projects that would have replaced depleting production will not be developed due to regulatory uncertainty. A structural supply gap will emerge that cannot be filled from any other source. Silver prices will reprice to reflect the new supply reality, potentially reaching $60 to $80. The wild card, escalation to nationalization. If commodity prices rise significantly, political pressure to reclaim mining profits could intensify. Nationalization of silver and gold mining remains a low probability but high impact scenario. Even partial nationalization, mandatory government stakes in mining projects, would devastate foreign investment and production. This is not the base case, but it is not impossible, given the ideological trajectory, the irreversibility factor. Even if a future government wanted to reverse course, the damage will take a decade to repair. Mining investment decisions operate on 10 to 15-year horizons. Once trust is broken, it takes a generation to rebuild. The production lost to the current siege will not be replaced. The supply disruption is permanent. If you have been warning about Mexican political risk, if you understood that resource nationalism would eventually threaten supply, if you positioned in silver anticipating exactly this scenario, this is your vindication. For years, mainstream analysts dismissed concerns about Mexican mining. They assumed that economic rationality would prevail. They believed that tax revenue and employment would protect the industry. They were wrong. The siege is real. The production declines are documented. The investment flight is measurable. Every warning that was dismissed as alarmist is now appearing in corporate SEC filings and government statistics. The analysts who understood political risk are being proven correct. Silver prices will validate this analysis. The supply constraint is structural. It cannot be quickly resolved. Higher prices are the mathematical consequence. Those who positioned early will benefit. Those who dismissed the warnings will scramble to catch up at higher prices. This is not gloating. This is recognition that understanding political risk matters. The mainstream missed this story because they analyze spreadsheets, not ideologies. Spreadsheets don't capture the fourth transformation. You understood what they missed. Your positioning will be rewarded. Let me give you a specific action plan for capitalizing on Mexico's silver supply crisis. Priority 1. Physical silver accumulation. The supply disruption from Mexico will tighten global physical markets. Premiums will rise. Availability will become sporadic. Accumulate physical silver while supplies remain accessible. Recognize that premiums may increase significantly as the crisis develops. Prioritize forms with established liquidity. Sovereign coins from major mints, bars from recognized refiners. Priority 2. Primary silver miners. Outside Mexico, companies with production concentrated in stable jurisdictions will benefit from both higher silver prices and relative safety premiums. Consider producers in United States, Hecla, Kerr Mining, Australia, silver as byproduct, Canada, exploration focus. Avoid or reduce exposure to Mexico concentrated miners until regulatory clarity emerges. Priority 3. Streaming and royalty companies. Streaming companies with diversified portfolios will benefit from higher silver prices without direct operational exposure to Mexican regulatory risk. Wheaton Precious Metals has Mexican exposure, but also significant production from stable jurisdictions. Priority 4. Monitor Mexican mining companies carefully. Companies like First Majestic, Pan American, Mexican operations, and Endeavor Silver are directly exposed to the siege. These stocks will be volatile. Negative headlines will create selling pressure. They may also be acquisition targets if larger companies see value in distressed assets. Position sizing should reflect the binary risk. Priority 5. Track key indicators. Watch for concession revocation announcements, water allocation decisions from Conagua, community blockade, reports, production guidance revisions, any discussion of silver nationalization. Each development provides information about the trajectory of the crisis. Priority 6. Patience and position sizing. The siege will unfold over years, not weeks. Position yourself for a multi-year supply disruption, not a short-term trade. Size positions appropriately for volatility. The path to higher prices will not be smooth. Do not over-leverage. Do not invest money needed for expenses. Build positions you can hold through turbulence. Priority 7. Spread awareness. The Mexican silver crisis is one of the most underreported stories in commodity markets. Share this analysis with others who may benefit from understanding the supply dynamics. Let me leave you with this. Mexico has been the silver capital of the world for 5 centuries. The mines of Zacatecas, Durango, and Chihuahua have produced more silver than any other place in human history. That production is now under siege. The world's largest silver mine was blockaded for 3 months. Water restrictions are curtailing operations across the country's most productive region. 47 concessions are under review for potential revocation. Investment has collapsed by over 30%. Production is declining for the 2nd consecutive year. This is not a future threat. This is happening now. 24% of global silver supply is caught in a conflict between an ideologically driven government and a mining industry that has nowhere else to go. There is no backup Mexico. There is no alternative source for 190 million ounces of annual production. If the siege continues, and all evidence suggests it will, global silver supply will decline. The deficit will widen. The price must rise. This is not speculation. This is supply chain mathematics. The siege of Mexico's silver mines is the most significant supply disruption in a generation. And it is accelerating. The mainstream is not covering this story. They are focused on interest rates and inflation data. They are missing the physical reality unfolding in the mountains of Mexico. You are not missing it. You understand that supply disruptions matter. You understand that political risk is real. You understand that the siege is a catalyst for silver repricing. Position yourself accordingly. This is Chronicles of Currency. Mexico's silver mines are under siege. The supply emergency is here. The price surge is coming. I'll see you on the other side. If this analysis was valuable, subscribe and hit the notification bell. I'll be tracking the Mexican mining crisis and providing updates as events unfold. Drop a comment. Were you aware of the Peñasquito blockade? How are you positioning for the supply crisis? Share this video with someone who needs to understand what is happening in the world's largest silver-producing nation. The siege is real. The supply disruption is documented. The price surge is coming. Chronicles of Currency, out.